If during the year, all you did was hold assets and maybe buy more, do you have to pay taxes? Are you subject to self-employment tax if you're a minor? How do you calculate your capital gains from your trading of cryptocurrencies during the year? If during the year, all you did was hold assets and maybe buy more, do you have to pay taxes? Do you have to report that on your tax return? Well, it really depends upon what you mean by the word hold. Now, some people hold, but they took some of them and they exchanged them for other currencies, which they then in turn held. Well, that might be holding to you, but to the IRS, that's an exchange and it's a taxable event. So that activity, that single or those exchanges would be taxable. But the mere fact that you hodl, that you just hold a coin, it started out as one, at the beginning of the year, and at the end of the year, you still held the same coins. There's no tax on that. That's a beautiful thing. And it's does not have to be reported on your tax return. Now, if you happen to be hodling that coin, but at the same time staking that coin, the rewards that you receive from staking are considered by the IRS income at the fair market value at the date they're received, and that needs to be reported as other income on your tax return. Are you subject to self-employment tax if you're a minor? Well, that's a great question. It depends how you do it. There are, in general, two different ways that you could be doing mining of a coin, and this includes staking as well. If you are actually running the node, that means you actually have to invest in the effort to keep the node up and running, the electricity, paying for that, uptime issues, then you are actually engaged in what the IRS would call a trade or business, in which case it would be subject to taxation as income, and that also be subject to self-employment tax. Self-employment tax is basically FICA or Social Security tax on income by a self-employed person. Now, the second way you could be doing mining would be to give money to someone else who's doing the money. So like you're paying to be a part of a cloud mining service. Maybe you're contributing your coins to somebody else who's doing the staking, a validator. Now, in that case, the income, the rewards that you receive are not subject to self-employment tax. Why? Because you yourself are passive, you're engaged, you're investing, you are not engaged in what the IRS would term as a trade or business. So it matters a lot, and you can save a lot of money if you trade in a passive manner. How do you calculate your capital gains from your trading of cryptocurrencies during the year? Let's say you bought a coin on Kraken, you moved it to your personal wallet, then you moved it over to Coinbase, and then you sold it. How does Coinbase know what you bought it for? They don't. They're going to report, however, the total value of the proceeds to the IRS. All right, so let's understand this. Let's say I bought $1,000 of XYZ, moved it to my personal wallet. That's not taxable. Then later that year, I moved it from my personal wallet to Coinbase, where I sold it for $4,000. All right, what do I have to? What is Coinbase going to report to the IRS? They're going to report $4,000 of proceeds, and unless you on your tax return state that you had $1,000 of cost, the IRS is going to think that you had a $4,000 gain. So it's up to you to put the cost and the proceeds together. There are a lot of online tools that do that, but I will tell you that as you add more exchanges and more transactions, the complexity of using these tools can become overwhelming for the average person. So if you are a medium to large investor, contact our office. We do a fixed price, full service. We do the gain calculation for you. Otherwise, if you're on your own, my advice is do not report more capital gains than you genuinely believed you had. That'd be just a rule of thumb. So if you have any questions, give our office a call. Our experts are waiting to help you.
Thank you very much for listening to today's show, and I hope you enjoy it. Please give us comments. We would love to respond to any questions you give us. If you have tax questions that we can apply to, we will try to address it in future shows. Please hit like, subscribe, follow. Thank you. Have a great day.
The Clinton Donnelly Show, where we explore how taxation and regulations of cryptocurrencies affect your daily life as an investor. Clinton has a law degree in international financial regulation. He is an enrolled agent and certified as a cryptocurrency anti-financial crime specialist. He has clients in 71 countries. He is one of the top experts in crypto taxation in the US. This show is sponsored by CryptoTaxAudit.com, the income tax experts for US crypto investors. Are you frustrated with using online crypto tax services to calculate capital gains? Are you a high-frequency trader, DeFi, NFT, play-to-earn or whale investor? Nothing is too complicated for the experts at CryptoTaxAudit.com. Are you frustrated that your accountant doesn't understand crypto taxes? Crypto Tax Audit uses a proven, bulletproof crypto tax return methodology to prepare a tax return that doesn't attract the attention of the IRS. Crypto Tax Audit also offers an exclusive audit defense membership service. It's like car insurance for your tax return. If your return gets selected for an audit of crypto reporting, they will defend you at no additional charge for the entire life of the audit. No one offers anything like audit defense membership. Go to CryptoTaxAudit.com to learn more and schedule a private tax consultation now. The opinions expressed in this show are not legal advice. Tax and regulations are complicated. Your situation is unique, so you should always consult a tax professional.